Hello, this is Robert. I'm a tax attorney here at TRP, and we're going to be going over back taxes, how to resolve debts for good, how to really resolve back taxes, the secrets that tax relief companies don't want you to know about. So first, you need to figure out a resolution. And the first thing we're going to go over is if you're low to average income. So your low to average income, you got no or low value assets, low to no home equity, you got a pretty decent chance at an offer in compromise. Better chance if you have kids. And you're going to check this by completing the financial analysis section of Form 433 AOIC. So you already know you don't have the assets. You just go straight to the financial analysis section, and we have a guide link below on how to do that on offer in compromise. And just look at the financials, income versus expenses at the end of the month after you enter the IRS data. Is it zero? Is it close to zero? Good chance you're going to get a settlement. Also, you can just give us a call at 888-515-4TAX. That's 888-515-4829. And one of our attorneys will just go over it with you and see if you're a good candidate. So figure out a resolution for higher income. So you got a pretty high income, probably a payment plan, unless the balance is really huge. If you owe millions of dollars and you're making $100,000, $200,000, there might be a settlement there. But if you make $100,000 and you owe 25 grand and you have no kids, probably not getting a settlement. So if you have an under $50,000 debt, you just do a 72-month payment plan and you're done. The IRS will accept a payment plan over 72 months. They call this their streamline plan. Now they have a $50,000 to $100,000 plan. So when you owe between that range, they'll do it over 84 months, but they file a tax lien. So when it's under 50, there's no tax lien. Over 50, there's a tax lien. Key point here. If you owe like $57,000 and you make pretty good money, it might be worth it just to pay the $7,000 some dollars and then set up a payment plan under 50. And we actually have a lot of cases like that. People call us, they're not sure what to do. We end up calling in, get them some time, find out what the total is, have them pay it down, and then set up a payment plan for the rest. Plus, a first-time penalty abatement if you qualify. So first-time penalty abatements, they're given on the first year you owe in a series of years. The IRS then checks the prior 3 years, and if no penalties were assessed prior, an abatement is given. Here's an example. So you got debts on 2010, 2011, and 2012. 2010 penalty gets abated since 2007, 2008, and 2009 had no penalties ever issued on those years. So if you had a penalty on 2007 of like $50 and then it was paid, that still counts as having had a penalty. It has to have never been issued. They call this a first-time penalty abatement based on, quote, prior compliance, the fact that before that year, you didn't have any issues. So lower income and you got some assets. So if you have low income but still have some assets, currently non-collectible status is often the best option. And pretty much that is a payment plan for $0. It's like nothing happens. And the IRS only has so long to collect. They got 10 years. So there's some cases where the debts are coming close to expiring, the debts are old, and we might put it in currently non-collectible status, even though an offer in compromise is a possibility. We might just go ahead and do currently non-collectible because the debts are about to expire. The downside is the liens don't get withdrawn, and we'll talk a little bit about lien withdrawal in a couple pages here. So example, house has equity of $200,000. You owe the IRS $50,000. Your income is $3,000 a month and you have 2 kids. IRS might not grant an offer due to home equity. Sometimes you can get around that, sometimes you can't. But if the equity is pretty high and the IRS balance is much lower than that, good chance you're not going to get an offer. Exceptions that often work, though. The home is unsellable or the home value is so low you cannot afford rent. And here's some actual case examples that we had. So the home value was $30,000 for our client. He was a trucker. He was making about $15,000 a year after all his expenses. And if he had to pay rent for 2 years, he would have been homeless. So we literally put in the explanation, his house is only worth 30 grand. If he had to pay $1,000 rent for a couple of years, he's not going to have anywhere to live after that if he was forced to sell his home, theoretically, to do an offer in compromise. And guess what? They accepted the settlement for $100. They just completely disregarded the home. Here's another example. The client met the OIC requirements through his financials. He had about 50 grand, but he had a home worth $250,000. It was in Mexico. He lived in Mexico, and he couldn't sell it. And he had proof that he had it listed for 2 years with an agent, and it's just some part of Mexico that people aren't looking to buy houses right now. Maybe the violence or whatever it is, but people in that area of Mexico were just not buying homes. And initially, they rejected it because he had the home paid off. When we appealed it, it got accepted. And that's not a guaranteed thing. These 2 examples, these are a little bit more within the discretion of the IRS officer that's assigned. But most of the time, they're pretty reasonable if you give a good explanation. So bankruptcy and payment in full. These are the other options. If you have low income, however, whatever your income is, if you can do these, you can do these. Now, bankruptcy, it's a good option if you owe a bunch of other debts. You got medical bills stacked up, all kinds of debts. Okay, not a good option if taxes are your primary debt. And it doesn't get rid of payroll or sales tax debts. And the reason it's not a good option if it's your primary debt is the what you have to qualify for bankruptcy financially is very similar to what you have to qualify for offer in compromise. And it looks way better in your credit to get an offer in compromise than it does a bankruptcy. The bankruptcy is going to be stuck with you for 7 years. The offer in compromise is going to be done. At most, it takes 2 years. Most of them now are probably within the 5 to 9 month range at this point right now. And when it's done, we withdraw the liens and it's like it never even happened. Okay? Pay in full. If you got the money, often this is the best option. Having too much money, you won't get an offer, and delaying payment just racks up costs. So make sure to request a first-time penalty payment if you're doing this, and you can use an IRA extension of full pay to get more time to pay it off. So if your case is not in collections yet, they'll usually give you an extension full pay of 120 days. If it is in collections, they'll usually give you 60 days, and then that stops any activity, and it gives you some time to pay it in full. If you got the money, you're just probably racking up fees, and you're really not going to qualify for a settlement anyway. And that's probably not most people that are watching this video anyway, are probably not paying in full. Lien withdrawal. It's kind of the lost procedure. So when you pay in full, you get an offer in compromise accepted, or are in a payment plan for a less than $25,000 balance, a lien withdrawal should be requested. So many tax relief companies don't request it because it's after like the normal service period. You pay for your case to be done. A lot of them charge like these really high flat fees or monthly fees, and then the case is over, and the lien withdrawal isn't always done right away. So you should usually wait a few months. And if it's in a payment plan under $25,000, you got to wait for 3 direct debit payments to post. So the payment plan has to be in a direct debit payment agreement, and 3 have to post. Then you request a lien withdrawal. When an offer in compromise is accepted, you can also get a lien withdrawal. The only exception where you might not get it is where you had some debts that expired due to age and some debts that were settled. Then if the lien was filed together with some of those years that expired, those years cannot come off. The years that expired will just show as released, which is still great, but withdrawal is better. And there's another reason why offer in compromise is better in bankruptcy, because we get accepted and we withdraw it. It's like it never even happened. See our IRS lien withdrawal guide, link below for more information on lien withdrawals. And that's just a procedure that a lot of places aren't doing, and I think a lot of people don't even know about it. A lot of people fail to stay up to date in tax relief. It's that kind of industry, I guess you could say. And the easiest way to deal with back taxes is really just call us and have us do it all for you. So you can call 888-5154-TAX. That's 888-515-4829, or go to our website, trp.tax. We order the information, check it all out, file what needs to be filed, and proceed on the best resolution. If we can't help you, we tell you. We don't make false promises for settlements. If we don't think you can get a settlement, we'll tell you right away. If we think you can get a settlement, we'll tell you. And if we think it's kind of iffy, we'll tell you. We'll tell you what the odds are. So if you're going it alone, though, and you just absolutely can't have any help, be sure to check out our free tax guide. That's at trp.tax/taxhelp. Again, that's trp.tax/taxhelp. And thanks for watching.